What is the market telling me this week? Welcome to the Nick Rutherford Report, and the market is either going to take advantage of you or you are going to take advantage of the market. So hit that like button, leave me a comment, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. And Wall Street is at it again, trying to scare you to do the exact wrong thing at the wrong time. There's a news article here talking about stubbornly subdued. University of Michigan sentiment slumps as home buying conditions hit a record low. The market is telling you to freak out. Well, that might be the exact wrong thing to do. And of course, it continues when there's articles like this. Housing market cracks. Record number of listed homes have price drops. Is it time for another financial crisis just like 2008? Well, the market, I believe, is just trying to scare you, because all it's doing is trying to take advantage of me so that I do the wrong thing at the wrong time. But you're here because you're going to watch the market with me, and we're going to let the market tell me what to do. What's very interesting here is you also have articles like this, and I'm putting this here because it's saying that Bitcoin rebounds after ETF investors buy the dip. Inflows surge near 300 million. And I love how articles always come out telling the reader what they should be thinking about what's happening, or they pick out some sort of piece of data and say this is why something's happening, but they only pick it out after the fact. So I don't really think that they're really good at predicting. But one of the more important articles here is something that I'm watching that I wanted to point out, because here we say that the Saudis threatened to sell European bonds if Russian assets were confiscated. And this means something to me because there's a whole set of news that panders to people who are worried about doom, and that the dollar will be demised and gold will go to the moon. Well, guess what? If the dollar's going down, that means all assets priced in dollars are going to go up. So to me, the market just tells me I want to own the best, highest quality assets that are going to benefit if and when or as the dollar continues to go down. So this is something that I'm watching just because it's going to be a political thing that could cause turmoil in the oil market, and of course with precious metals, maybe not. And it definitely could cause some instability that could change the market. So I'm just watching it, but I'm waiting for the market to tell me what to do. I'm not going to preemptively do something. So the next thing that I want to point out is this type of thinking always inspires articles like this. As political parties fall, gold and silver will rise. Well, guess what? If there's turmoil and the dollar's going down, everything good will probably rise. So I'm very hesitant to latch onto one specific thing, but of course I invested a position in gold years ago inside the Sprott Gold Physical ETF so that I can have liquidity with gold that is not dollars, and I can use that as just a portfolio diversification, because when it comes to investing, survival is all that matters, and I need to survive another day so that I can make money. But let's talk about what happens next and what I'm doing about it, because all in all, no matter what Wall Street is telling you, I like to look at the data. And the data is going to tell me what to do, and the market action is going to tell me what to do. And what's most interesting is the theme that I've been talking about every week on here. There's one segment of the economy that is doing fantastic, and there is another segment of the economy that is doing absolutely terrible. And I want to be invested in the side of the economy that is doing well so that my wealth builds on itself instead of losing money. And the main point that I want to bring up here with this article is business bankruptcies jumped 34% in the first half of 2024. And I'm watching this because this is some data that could be very important. The more bankruptcies we have, that is telling me there's a storm brewing in the economy. And of course, if you were watching last week, we already know this because unemployment is slowly ticking higher. And that's what I'm watching because that will literally cause me to freak out. And you'll see it on here. And the market will tell me when to freak out. And I'll be telling you what I'm doing and how much I'm freaking out. But first, I want to look at this because the CPI came out. And the CPI, cool CPI inflation, puts 3 Fed rate cuts in play. And you know what? Everyone's excited about rate cuts, but I'm scared about rate cuts because the data tells me I should be terrified about rate cuts. Because if you look at the past times that the Fed cuts rates, usually we have a recession. So we'll just use these rates here, the 2-year constant maturity of treasuries. So you can see in the 80s here, the Fed cut rates and we had a terrible recession. And then the same thing happened here. It didn't happen here. The Fed cut rates here, we had a recession. In the 90s here, the Fed cuts rates, we didn't have a recession. In the 2000s, the Fed cut rates and we had a terrible recession. In 2008, the Fed cut rates here in 2007 and 8, and we had a terrible, terrible super recession. Then in 2019, they began to cut rates. Somehow they predicted that we would have a terrible plague and the rates got cut, and we had a terrible recession. So here we have 1, 2, 3, 4, 5, 6, 7, 8 times the Fed has cut rates in the last 40 some odd years. And out of those 8 times, only 2 times did they cut rates and there wasn't a big calamity in the market. So just probabilities speaking here, when the Fed starts cutting rates, I'm going to be extremely cautious in watching the market for the market action for it to tell me what to do. Because historically, that'll be a time to freak out. And the data here is what we want to look at because I really see, like I said last week, 3 situations. I see that employment gets worse and that maybe we have a market crash, or employment gets worse, but the new economy keeps going. And this is what I'm talking about. There are trends in the economy like nuclear power, like tech as far as AI. And I'm not talking about crazy profitless tech. I'm talking about Google, Microsoft, and the type of tech that is making money because Wall Street loves earnings. And if Nvidia is beating on earnings, guess what? The stock is probably going to go up, provided people think that they can keep beating on earnings. Or finally, the third situation is the economy just muddles along sideways. So these are really the 3 situations that I see, and I'm always zoomed in on the data with employment being the most important thing because a lot of the data already looks bad. But to me, what's most important is everyone's income because one person's income is another person's spending. And if that goes down, well, corporate earnings are going to go down and then Wall Street's going to freak out. And then I'm going to freak out as that's happening because the market will be going down. But all of these different articles, all of that, everything that's happening, what we really need to do here, what I'm doing is watching the market. Because if I'm watching the market here, well, look at this. The entire market is hitting new all-time highs. We're not in a downturn. We're not trending down. The data is telling me that unemployment hasn't cracked yet. It's getting very close to how it cracks in the past relative to other times that there have been terrible things happening. And if it gets to that point, I'm going to be lightening up on my investments. But until then, I'm holding on long because the market is going up. And if we look at Bitcoin here, it might be going down, but this to me is just typical market action because I like to look at the past and study the past to predict what happens in the future. And in the past, if you model out Bitcoin and you look at the people who make models for it, it halves, the supply goes down, and then eventually 6 months, a year later, it starts to go up. So right around the halving, it doesn't typically go up. And guess what? It just happened a couple months ago, so it wouldn't surprise me if it goes up, down, sideways. But I think in 6 months or so, it should be a lot higher if history is any guide. Of course, I could be completely wrong and lose a lot of money, but if it goes down and if the data tells me that we're going down, I'll be selling. So one other thing that I want to point out here is gold is reaching its all-time highs. And now I don't always chart gold, but why this is interesting to me is because it's, again, going up, up, up. And if things are going up, 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 that's the market telling me I need to be long, long, long. Well, all of Wall Street and all of the news is telling everyone they should be freaking out and selling. Well, they probably want you to sell so they can buy. Of course, the data could change at any minute, but the most important piece of data that I'm watching is Nvidia, because this is the market leader. It is now one of the biggest positions in all of the ETFs just based on its market cap. So money is going to be flowing to this. And as long as their earnings are accelerating and the analysts believe their earnings will continue to accelerate, then I think the market is going to go up. At least that's what I think today, right now on Friday afternoon, based on all the data that I'm seeing. Of course, come Monday morning, I could change my mind, and then I could light my hair on fire and freak out. But until I see a change in the data, everything looks good. Things are going up. We're climbing the wall of worry. So while your neighbor is out there selling his investments because things are at all-time high and they're making the exact wrong move at the wrong time, I'm long because the data is telling me to be long. And until unemployment cracks and until the market trends lower, I'm not going to fight the market. Until then, I'm going to ride the wave of making more and more money and let the market tell me what to do, and it will tell me when I need to do something different. Of course, I'll ride it towards the peak and start to ride it down and lose a little bit of money if and when that happens, which eventually it always will. But I've been in the market for a while now, so everything is looking rosy, and let's keep the train going until it doesn't, and let's watch the data, and I'll let the market tell me what to do. So hit that like button, subscribe to this channel, share this with someone who will get a lot out of it. I'll see you next week, or I'll post a video sooner if the market is telling me something else. But right now, Nvidia is up, all these charts are up, the data looks pretty good. The only thing I'm concerned about is, well, when the Fed cuts rates, that's usually really, really bad, even though Wall Street will tell you it's really, really good. So stay tuned till next time, and I'll see you in the next video. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.